Hello everyone, this is Dr. Sonam Arora, Assistant Professor, LG Integrated MBA. Welcome you to the Finance Specialization subject, Banking and Insurance. This subject is a part of Semester 9. When we talk about the financial system of India, the financial system stands upon four pillars. The first is financial product and services provided by the financial institution. The second is financial market. The third one is financial regulator. And the fourth one is these product and services. Now, the bank and insurance is one of the major portion of financial system. When we talk about the financial system, banking and insurance play a very important role because these are the institutions which provide you financial product and financial services. When we talk about our syllabus, the syllabus is divided into four modules. The module 1 and module 2 discuss about the banking, whereas module 3 and 4 discuss about the insurance. Now, when we talk about bank, what exactly a bank is? A bank is a place where you go to deposit your money or where you go to lend your loan. Now, first we see the definition of banking. The term bank is derived from a French word banco, which means a bench or money exchange table. According to the Indian Banking Company Act 1949, a banking company means any company which transacts the business of banking. Now, what exactly the business of banking? So, previously the business of banking is divided among two parts. First is accepting for the purpose of lending. It means you accept the money and you lend the money. The difference between the accepting rate and lending rate is your spread, which is the profit for a bank. Now, when we look about the history of banking, the first bank were Bank of Hindustan, established in 1770, and the General Bank of India, which was started in 1786. In April 1935, RBI was established. It is a Central Bank of India. When it established as a private bank. With the Banking Regulation Act 1949, these banks were transferred into a nationalized bank. There were around 1100 small and large banks in India before independence. In 1969, 14 banks were nationalized by Government of India and the second round of nationalized was in 1980. Now recently we are going with the phase of merger of banking sector from 2014 onwards. When we talk about the oldest bank existence in India, that is SBI. Established in year 1806 as Bank of Calcutta. Three Presidency Bank, Bank of Calcutta, Bank of Bengal and Bank of Madras merged in 1921 by East India Company. So, the East India Company was the pioneer which started banking sector in India. This renamed as Imperial Bank of India and further renamed in 1955 as State Bank of India. So, let's see the different functions of bank. The banking function is divided into two parts. One is primary function and second is secondary function. Primary function is accepting deposit and lending loan. Now look at the primary function in detail. Now we classified primary function into two parts. Accepting deposit. Now deposit are of many types. The first one is saving deposit. You all are having your account in any branch of a particular bank. That particular account is your saving deposit account. The rate of interest is nominal in your saving deposit account, that is somewhere between 3 to 4%. The second is recurring deposit. This is particular account where you deposit a particular amount on recurring basis. That amount is fixed, duration may be anything. You deposit your money monthly, quarterly or yearly. You deposit it on regular basis, that is your recurring deposit account. The third one is fixed deposit account where you deposit a amount for a fixed time duration. The percentage of interest is more than on fixed deposit compared to the saving deposit. Again, the percentage also change based on the time duration of your fixed deposit. For example, the minimum time duration is 15 days whereas maximum there is no limit. The highest the range of the deposit amount and the range of time period, accordingly your interest change. The last one is current deposit account. This type of deposit account is for business people where they can very frequently change the amount and transfer money from one account to another. Now when we talk about lending loan, the loans are in different form. The first one is overdraft. Let's say there are 1000 rupees in your account and you want to inhale 1100 rupees. That extra 100 which you charge from your bank, that is overdraft. A bank can charge service charges on the overdraft. Now it is a type of loan given by the bank, but for accepting the overdraft services, it is necessary that you need an account in that particular branch. Now when we talk about cash credit is similar to overdraft, but the basic difference is we go with an example. So if you are having your account in PNB and you avail the services of extra money, it is called as overdraft. But you are not having an account in PNB and you want to avail the services overdraft, then it is called as cash credit. It means when you take the overdraft services from your bank, then it is overdraft. And when you take the services of overdraft from another bank where you are not having any account, then it is called as cash credit. The another type of loan which are very common, that is retail loan. It include number of services like home loan, vehicle loan, educational loan, personal loan, and even right now it is your COVID loan also. Now look at the secondary function. Secondary function is again an umbrella of function divided among agency function and general function. Now agency function is, first one is transfer of fund, either electronically or non-electronically. For example, you can transfer your fund with the help of check. It is non-electronic source. Even you can transfer your fund from NEFT, RTGS, IMPS, that is electronic source. The second agency function is collection of check on the behalf of the customer and the periodic payment and collection on the behalf of customer. For example, you have to pay rent every month, and this particular task of paying rent, you give it to the bank. Now the bank will pay rent on your behalf at a particular date, that is periodical payment. Similarly, portfolio management services, trustee services, and other bank assurance services. Now when we use the bank assurance, it combines the banking services as well as insurance services. For example, your bank is selling the insurance services, health insurance, medical, that is come under the category of bank assurance. Now when we talk about the general function, it is providing the underwriting facility. Kotak Mahindra is a very good example of underwriting bank. It also deals with the foreign exchange and providing some trustee services like locker facility. Now look at the structure of Indian banking system. Although we are going to discuss the structure of Indian banking system in detail in our next session, here just have a look. So the highest authority in the banking system is the regulator, that is RBI. It divided the bank into two categories, that are scheduled bank and unscheduled bank, also called as non-scheduled bank. Now scheduled bank are further classified into two parts, that are the commercial bank, which we almost seen in our areas, and second is cooperative bank. Commercial bank is further classified into public sector bank, where the ownership of government is more, private sector bank, where the ownership of government is not at all, foreign sector bank, and regional rural bank. Whereas cooperative bank is classified into urban cooperative bank and rural cooperative bank. When we talk about the public sector bank, previously it is SBI and Associate Bank. Right now it is only SBI after the merger in 2017. Other nationalized bank, there are total 12 nationalized bank in India right now, and other public sector bank. We are going to discuss this in detail in our next video session. Thank you.